weekend all. Ira Epstein with your weekend edition of your financial market wrap-up. And this is for Friday, the 4th of August, 2023. Well, today was the big jobs report day. And with that report, wow, what a crazy market we had. You tried a hard rally in the stock indices, and you can see how high you got. It got to 35,601 here in the S&P 4560. 15,601. And then we came crashing down at the end of the day, closing near the day's lows with all the indices down. So what the market rallied on was the fact that the job gains keep falling. They're now in the 180,000 range. They corrected last month and dropped that down as well. By the way, this just doesn't tie up at all with the ADP number, which keeps going up. That was 300 and some odd thousand jobs, and here it keeps growing there, and we keep going the other way here. I don't get it. The other part that this market went with, and by the way, the JOLTS data tied in to a degree with that, but it's the wage inflation. It doesn't go away, and everywhere I look, I'm not seeing wage inflation going away. Let me explain. Screen Actors Guild. The writers. Now notice has been given to the big three, auto, that the unions want to go out on strike against them. The demands are such that the union made that there is zero chance that there's going to be an early settlement. Maybe at the very last minute they can get something done. But right now, at best they can do is talk, but nobody's going to pay that amount, I think. You never know what's going to happen, but I don't expect it's going to be that way. We've seen pilots getting a lot more. So wage inflation has not gone away. Now, the amount of it has shrunk dramatically. It was only up 0.2, so those are things you got to look at. Who's in the labor force? That's another thing we got to be looking at. The baby boomers are leaving. They are not returning. That seems to be what we see. But there's a group there, that 55-year-old group on to 65. That is a group that's interesting. What are they going to be doing, all right? They're not considered the baby boomers. I question, did they make enough money? Are they ready they can handle inflation and not returning to the market? I don't know. So we'll see. The big gain came in from healthcare. Half the new jobs went back into healthcare, which makes sense. You know, those people got so worn out that they were heroes dealing with COVID. Go to a hospital. Can you imagine working in that? And they did it. Our memories are so short. People lined up in the hallways and dying in triage centers and parking lots. You know, you forget these things. So people are going back into that. And of course, with the aging population, it's very important. Now, something real important. I'm looking at these indices, and I've been promising I'm going to do a special report for you, and I'm trying to figure out what report should I do. Well, I came up with it, and I did it today. And the report I did, right here, it'll be there, is on the stock indices, indices on the move. All 4 stock indices. I cover the seasonality of them between right now, August 4th, into the holiday period of December. I show you what they've done historically, the big months, the months that make money, months that don't, historically. Again, history has its limitations. Past performance doesn't guarantee what tomorrow will hold. Otherwise, I'd be a trillionaire, you'd be a trillionaire. Forget the word billionaire, because you know what history is going to hold and away you'd go. It doesn't work that way. But the beauty of the seasonality is there's reason markets move in waves in what they do. And then you look and say, okay, is there anything different this time? I don't think there is in the ones that I've covered. And the reason is, by the time we get to the September FOMC meeting, so much of this jobs data and CPI data is going to be known that we'll have a pretty good idea as to what the Fed's going to do or not going to do going forward with rate hikes or pausing or where they're at. I think it's exciting. How do you get this report? It's about 15 minutes long. It's a video, obviously, and I really cover a lot of data. I'm really proud of it. How you do it? You move your cursor up to the top here. You probably have to be on a PC to do that. I don't think you can do it off your phone. And when you do so, it'll take you right to the report area. Enjoy. Can I make it any easier? If you have questions, call my staff. They'll try to work with you on it, but that's how we build it to work. So now let's go in and take a look at what we've got, because it's important. Remember, this is your weekly charts, but I'll start off with a monthly chart of closes on the S&P. And what this tells me for the big picture is until you're back to 41, 26, 60 and under that, you have an upside bias on the big picture. When I look at the weekly chart of just closes, until you're back under 43.28, the bias is up. So I have reasons to believe that the noise we're getting in the market and the corrections are not that of a major top, are not that of a crash, but rather markets that want to correct, and they have gone up so far, so fast. They're not getting everything they need. The earnings that are coming out are a beat overall, but some of the big companies like Apple got beaten up. I mean, let's face it, their transition in their business is what it's about to their services, their games, everything else they're doing. But the phone, these upgrades, and you and I have talked about it, they're not enough to get me at least to go out and buy a $1,200 new phone if that's the price they're going to be. So we'll see what happens. As we look, you can see that this is a week of a correction. You got 2.36%. The pattern is still bullish. You've got higher lows, higher highs. The market is still over the 18-day average. And when you had the crossover where the 18-week moving average of closes got over the 100-week, you went up and made new highs. That's so often what happens. Doesn't have to make a new high for a whole move. New recent highs, and that's exactly what we did. And the market's been climbing a wall of worry called the Bollinger Band, not being able to close over it. It typically doesn't. It stays out of it only 5% of the time and is ready for a pullback of sorts. So next week, what will happen? You're going to jump in this market again. So it's at 43.28. The week before, the average was 43.08. So it's moving maybe 20 points at a shot, probably going to be up near 43.50. Unfortunately, if you go to it, you'll take out that break low. And that will give you a pause in the market. You no longer have the higher highs, higher lows. You're still embedded, but you closed at the low of a week. The weight of that on this is dramatic. So will we keep the embedded reading is something you got to take a look at early in the week. You've got to wait a whole week until Friday to know if it's going to stay up there or not, but it's going to come under pressure. That's going to be my guess to it right now. In the Dow, you still are embedded. Same thing. The market got 2 weeks in a row over the upper band. You only stay out of that band 5% of the time. Now it's pulling back in it. It is not a true trend. It's a momentum play because you have a lower low, higher high, not the same as we just saw. So I'm looking for pullbacks in this market as well. I don't have a reason to be short, but I have zero reason to be buying up at these levels. The NASDAQ trend turned down. You now have a pattern of lower highs, lower lows. You have an outside week. If you haven't taken my charting course on outside weeks, shame on you. It's right there on the website. Go under education, iraepstein.com. Take a look at it. This gives you a story. And if the market's going to drop now, you're putting into the play that maybe it wants to come back and challenge these numbers. Be careful. You're at the low. You're knocking on the door of losing an embedded reading because they will all come under pressure early on Sunday night. You take a look, and I think you'll get an idea of that. In the Russell, are we embedded? So embedded means that both numbers are going sideways over 80, but they have to do it at least 3 weeks in a row. 1 week, 2 weeks, and here's the week before. Didn't do it. In order to do it in embed, which would be very bullish, the market's got to, this week, have that occur. The first support in the market's going to be the resistance point in the past, which was the 100-week average. I teach traders not to be a buyer between the first challenge of a major moving average that you haven't done in a long time in a Bollinger Band. Sometimes it doesn't work out. We'll see if this one works out or not. Not buying doesn't mean that I'm going short or having my clients go short via my recommendations. In the bonds, you're under the lower Bollinger Band and bearish. So the people that are saying, oh, no, we've seen the peak. You haven't seen the peak yet. We don't know where the peak is. You tell me on that chart where you're at. Obviously, if you're going to really make an argument that you want to add rates, you got to go back here. You're not there. You're on borrowed time as you're under the Bollinger Band. That's not a reason to be bullish, and you're oversold. It might be a reason not to be bearish right here. In the 10-year notes, you can see that you're oversold, hugging the Bollinger Band. Now, you can ride these Bollinger Bands down. You have sideways action here. From sideways action come big moves. If this market wants to be really bearish, it keeps pushing. It's already got the downtrend. It locks in here. Ideally, you embed. When you embed, and you can see when you did this back here, the market really picks up the momentum, hugs that band, and just pushes on it. That's what you have to look at. Bill Ackerman, big trader. This man is thinking that that's what's going to happen, I think. In the dollar index, to me, this is neutral. I don't see all the fanfare where people are getting excited. I admit I shouldn't have been as bearish as I was, and I wasn't. By the way, if you get my advice, my paid recommendations, I haven't put out a sell dollar in a long time. But this is where I think the market's got to fight its battle. You're at it. Now, if it fails here, then I get bearish again and I look for down here. What have I been saying on the daily charts? You get them. Come out along. Cover shorts in FXE. And FXE is down to the point where it either is good or it's bad. This is the first challenge since getting up to these Bollinger Bands where you're back to the 18-day average. The trend is up and you have worked off, past tense, being overbought in the market. Canadian dollar, well, the market's got the higher high, lower low scenario, was overbought and corrected it. I don't see currency plays live right here. And in the end, traders are wondering what to do. Even though Japan took the cap in a range that they allowed their interest rates to move, and they doubled it for all purposes on the 10-year, those that have tried to push on that have discovered the bank pushed right back at them, and that has dropped the value of the yen. Bitcoin, the support of the market's at the 18-week average of closes. The market peaked out against, past tense, but when you get up there, I teach this. First challenge of a Bollinger Band, overbought condition, and a major moving average. You've been with me. For most of you have seen these over and over. You know what I tell you. That's where the pros are coming out, not going in. The differential between WTI and Brent keeps narrowing in and bearish. As long as you stay under the 18-week average of closes, that's what defines the bias of the market. Brent coming up, overbought. When you hit the Bollinger Band, I think the pros are going to take the money off the table. I think you're in that zone already. I do think it's right now in WTI. No, I'm not bearish. You heard me talk that there's bullish events there, but you're overbought. Throw the name off the chart. Don't trade the fundamental, because why do you need a chart if you're going to trade the fundamental? Let's start with that. The chart action is telling you you're overbought. That is not bearish. There's spots where you want to take money off the table to have buying power on pullbacks in the market. That's all. That's how you play this game, I think. Gasoline. I was so wrong this week in gasoline. This is a market down 6%. I didn't see that coming. I don't mind telling you when I'm wrong. I was wrong. The chart action on the weekly was perfect. You went to the Bollinger Band and pulled back, and this is the support area. But the daily chart got me in trouble, not the weekly. Shame on me. So you put it all together, you come up with a game plan, you work with it accordingly. I've got the special report for you. Anywhere on this video, just move to the very top. You'll see the icons and enjoy. I'm Ira. Have a great weekend. I'll see you all Monday.